Hello, hello, hello. Welcome to Now Stock Trades. How's everybody doing today? All right, ladies and gentlemen. In this video, we're going to go ahead and we're going to do an executive report analysis on all of the major healthcare companies in the United States. Not all of them, I would say the top two. There's still a couple we could do, but we'll get an idea. This will all ultimately help us answer the question that BM asked. What's the story with CLOV? It's almost all-time highs again, and CLOV is moving in the opposite direction. Well, it's true. We are nearing all-time highs, and yet CLOV is, unfortunately down. But if you look at other healthcare stocks, like United, it's not nearing all-time highs, right? It's actually nearing all-time bottoms, right? So we'll talk about that, right? And so from a first principles perspective, before that, very quickly, this is the last day to secure access of our lifetime access using the SaaS coupon code, which will give you $1,200 off. At the timing of this video, you have 11 hours. 11 hours. Okay, you have 11 hours to take advantage. We've had a lot of people join. I wanted to first off, tell you thank you for putting trust in our platform. And, I promise that we're going to work hard each and every day, to take you from zero to hero. You're going to be doing Bill Ackman level style analysis by the time you're done. Right. So for folks out there, I don't know what you're waiting for. We have 11 hours and then we're going to be removing the sale and then prices will go back up over $4,000. Okay. So, take advantage, $1,200. And you can, pair it with Affirm, PayPal, whatever you have. This is by far one of the greatest, deals out there. So let's go ahead now. I don't know what's going on with California. I really don't know. I've been programming and coding. So in this video, we're going to talk about a investor from 2016 who saw the vision of Clover. And ultimately, we're going to talk about how, Clover's flywheel model was evident even in 2016, just to show you how far this can go. Access secured, baby. Let's go. Lots to learn. As you can see now, potential. You are now part of lifetime access. Now you've seen what's inside. Is there a lot? Is there a lot? How many pings did you get to your phone? You have the world's most billions of data is literally inflecting on your life right now. Don't worry, your brain will understand it. Don't worry. And you have members to help, okay? All right, so excellent. You're one of the many. All right, so now that we went ahead and did this, we're going to talk about this. Then we're going to go ahead and look at kind of right now, what's today? June 8th. So we're here. I'm expecting some market gains, and then like I said, I'm expecting the market to start falling down. We won't be releasing this anymore. This is the expected June performance. This is our equity analysis research. Again, this is institutionally, level graded data. And it shows you kind of where we expect I'm expecting the market will not hit all-time highs in the month of June. I'm expecting it to kind of touch it and then falter back down on a support and resistance line, right? Support line, right? And then from June and then onwards to August, then we make all-time highs. That's kind of what I'm looking at, right? So take advantage of this, for folks that are out there, just, learn this, right? Well, I mean, you can't get, you can see it, but learn how to interpret it. You can't build it because, it takes thousands of dollars to build. But luckily, it's all included in lifetime access. Hey, Michelle, you might do a favor. Can you lower the AC, please? It's hot. Yeah. Okay. Yeah, there it is. How many cats do we feed right now? We fed 8 cats, stray cats, right? All right. So, lots of pings, mildly overwhelmed considering my lack of tech knowledge, but confident I'll figure it out. And here's the thing. You have members out there that are 50, 60 years old. So you can ask them too, right? But your brain will start to parcelate and you'll go systematically on what we offer, and then you'll learn, right? Yeah. Okay. Zach Down, what's going on? All right. All right. So what do we do here? Let me think. Also, Humana puts another Louisville property on the market. Interesting. Could this be an ability to contain costs because they're maybe pulling out and Clover might pull in? I don't know. Okay. Also, very quickly, Clover Health is in this descending triangle, and I'm just you can see how it bounced right off of that. So I'm expecting it to start rebounding a little bit, but still trade in this range until earnings or until healthcare starts to pick up. But you could start to see that we're starting to level off here, but we'll see what the day brings. So there's a little Scooby-Doo here. All right, let me think. All right, before we go there, and yes, we're going to go ahead and do the analysis. We're going to do, this is our confidential equity research report. This is a God knows how many page report. We're going to, it's all proprietary information that we have, that we've developed, all coming from our software. You can generate these reports as a lifetime access member, and there's unlimited reports. You can generate as many reports as you want, right? So we're going to look at UnitedHealthcare. We're going to look at Humana. We're going to look at OSCR. We're going to look at Alignment Healthcare. We're going to look at Clover. Okay. And I'm going to open up this here because I'm going to do something right now when the time comes. Okay. So now I'm going to unlock my iPhone, and you can see very quickly. I have my phone right here. I have my phone connected, right? Here's my phone. So I have my phone connected to a Thunderbolt 5. Holy crap, right? Thunderbolt 5, right? And what we're going to do is I'm going to show you now we just released this new mobile version. So now you can calculate intrinsic value. And guess what, Noah? I knew someone's going to ask me this. Noah said, hey, does this work on Android? So I don't have Android, right? But do you know how much I care about my lifetime access members, right? You know what I did? I knew someone's going to ask. So I went to Best Buy. I went to Best Buy. Let me share the audio of this because it's kind of hilarious. So I went to Best Buy, and I went to use their Android phone, right? All right, guys. So I'm at Best Buy right now. I was checking the cheaper phone here, and this phone. It's an Android phone, and I don't have Android at my house. I'm an iPhone user, so I just got my screen. Hold on, nobody. Go watch this. I'm an iPhone user, so I just got my screen changed. So I decided to see if the update for the mobile status works on Android, and this is apparently supposed to be, that's an Android. So if you go here, and I also checked it on a cheaper Android too, and it works on all of them. And go to the mobile, look at this. And the answer is no, Martinez, yes, it works on Android. It also works on your iPads as well. It works perfectly. This is Android, literally Apple-like, sexy, Apple-like, right on Android. Let's go ahead and type in CLOV. You're gonna have to hit enter, so you have to hit autofill intrinsic, and then you're gonna have to press next and go, and then once it shows you next, that's when it'll run the intrinsic value calculation. Okay, and and we're gonna be programming it to where it'll be like Apple, but the thing is, Apple has a return enter. Android sadly doesn't. Well, let me show you what I mean. It works on the Apple, but then you just hit the auto intrinsic data, and it goes ahead and sets. You see how it works? You see how beautiful it works? Set up for you. Android. It graphs it. You can switch it to line. Same thing. And just like what we did here, we could kind of. So you see how there's a next. There's not an enter per se, which is fine. It's just it works, right? Let's switch it back, and then let me fast forward to show you the other one. I checked the other. Oh yeah, let me fast forward it. So here it is. So then now it's calculating all scenarios. And then this is my favorite part. So I wanted to go ahead and see if I can send it, right? Let's see if it sends to your colleagues. if it works. Well, that's beautiful. And then we'll hit the screenshot mode. And to see, as you can see, this is an Android because it doesn't look like Apple, right? And then I wanted to see if it can generate the report. Okay, good. Let's go ahead and download that, see how it works. Open. There it is, pristine. Look at that. See? Oh, yeah. Very pristine. Okay. You see that? So anywho, so that, yes. So to answer your question, it definitely works on Android. It works on any phone you would like. So what I did is I wrote the software to allow it to work on any phone out there, anywhere in the world, even our beloved customers from China. Yes, we got like 20 plus people from China, right? I love you. And we also got people from Hong Kong as well, right? We got people from China and separation Hong Kong, right? We got 2 different regions in the area. And that is amazing, right? So shout out to my Chinese folks and shout out to my Hong Kongers. You know, this is very incredible what we have, right? So I'm very happy. Like, you don't understand how much this means to me, right? To be able to have my mind and software permeating in one of the oldest civilizations in the world. You know, I mean, I learned so much from Chinese medicine. And also I love Jackie Chan. I love you, Jackie Chan, right? You know, and you know, the Rush Hour, right? You know, holy shit, right? Wow. And I hope one day I can visit China, and it'll be an honor and privilege to just you know, be able to see your culture, right? So anyway, connected the mobile version to my phone today. Love it. Thanks for all the hard work, Chief. Appreciate you, boss. We're always here for you. Your MF's relentless, Al, and I love it. And I appreciate you, brother. Appreciate you. Cool. Another question. I'm about to join the terminal. The Discord channel can be opened in the phone also, not just the desktop. Yes, you're correct. I only have my laptop at night at home. Yes, so you can access the Discord, and now you can access the premium Outstock Trades software. Brain fart. I haven't slept. I've been programming, you know, all weekend, guys. So yes, from your phone, right? Now, if you're gonna drop hundreds of thousands of dollars, millions of dollars, I'm old school. Before you do that, I mean, you don't have to, but before you do that, open it up on a computer. You know, sit down like a boss, grab some paper. You know what I mean? I don't know. I'm old school. I like computers. But yes, you can. This is for on the go. You can do it anywhere you want. Anywhere. You can also access the Discord. Anywhere. You can also use the stock terminal. Now, let me just show you. I mean, come on. Words, what do they say? Pictures speak 1,000 words, or whatever that they say, you know? So, okay. So here is the, by the way, we're going to go ahead and we're going to be showcasing other softwares into the mobile version. So we're going to get a lot of it. That's why prices are going to be increasing, right? Okay. So let me stop the share of the screen. Let me share the screen normally. So, oh yeah, this is radiology here. Sorry. Hello. Okay. So let's open it. So this is the Discord, right? You get lifetime access to this as well. So all you got to do is you got to go to a terminal section where it says here, right? You see where it says the terminal right there? You click on that, right? And then you go in, and let's say you want to open up Brain Machine. You just open up Help, right? You open up Help and you hit that, and would you look at that? Now you have access to Brain Machine from your cellular device. So let's say you want to look at, I don't know, price targets. You want to look at price targets, and let's say you want to look at what's the price target, and you got to click on it. What's the price target consensus of whatchamacallit? Let's do Apple. And you see it shows you, and it says, you know, please enter the ticker symbol. And then you hit Apple, or AAPL, and you hit you know, next or send, right? It goes in, sends it, and immediately you basically see the target high of 294, target low 188, right? And the consensus and medium, all from here, right? So let's say you want to go ahead and you want to see what the algo flow. Remember, algo flow costs $100 a month on its own for people that are charging just 100 just for that. We include it lifetime access, right? So you put in algo flow, and then let's do UnitedHealthcare, and let's do 5-day report. So you look at algo flow, and there it is. There's your algo flow. There it is. Look at that. So, so you could see, the market's, algo's kind of expecting it to fall down, but it's still negative territory, et cetera, et cetera. You could do support and resistance, et cetera. So yes, to answer your question, yes, you can use it on your phone. I'm watching this on a plane. Holy freaking shit. Right? Should I say some things? Just kidding, right? It'll immediately turn off. All right. Right. Discord has an app. It works fine on the phone. Absolutely. There it is, right? You might need to mute the channel though, or the phone notifications will blow up. Yeah. So the problem is we have a lot of things get sent. Just whatever you do, don't enter the political channel. I'm just gonna love the thumbnail. I didn't design this. Shout out to Drew. I love that. That's gonna be my Halloween costume. Yeah. All right. So that's Discord. But watch this. So now, and again, this works for Android too, guys. Right? So now, again, the whole point is to democratize this data. I'm sick and tired of people being poor. You're gonna get access to what the billionaires have now. Okay, you can have it access when you're, my best moments, honestly, my best trades in the options was sitting in the bathroom. Okay. Oh man, those were $1 million trades. Okay. All right. So you're gonna scroll down. You're gonna go to the Al Stock Trades mobile terminal. You click on this, and now you have access to the freaking whole intrinsic value freaking calculation. The whole intrinsic value calculation at your disposal, right? So what I want to do now is let me calculate what Clover's free cash flow could be, right? So we're going to take 80, subtract unpaid claims. We're going to add 43 million because there was negative 43 million last year. And then I expect them to be, let's see what they're going to be in terms of profitability in 2026 without the 14% increase. About 183 million. So imagine we add 183 million, right? So 80 minus 19 plus 43 plus 180. So you add that, and that's going to give you a free cash flow of 287. So we're going to go in, type in CLOV. We're going to hit enter. It automatically populates the shares outstanding. It does everything for you. It calculates the price, but we're going to go ahead and put, what was the number? 287. So 287. Okay, then we're going to run that. If you run that, we're going to go ahead and do 23% first. Oops, sorry. 23%. You see how there's a return? Android doesn't have that for some reason. I don't know why. Okay, so then now let's look at just we could do it here. Look at the best case. $32 stock price, right? $32. We could look at the classics view, and it calculates all scenarios for you in a very pristine design. Okay. And it's all from your phone, all from your freaking phone. Okay. Now, what I wanted to do is, I think Clover in the next coming years, it's going to grow more than 35%. So Belize is right. Belize is right. Because you remember I told you right now, Clover's growing 37%, but yet their medical cost ratio hasn't increased. That's from quarter 1. That's freaking weird. That's freaking weird. Why did the medical cost ratio for Clover did not increase when they grew 33% growth? That's weird. So that means that the software is working, which is good. It's weird in a good way. But the problem is, remember I told you there's a 3-year carrying average for medical cost ratio, which means that because 3 years ago they had a medical cost ratio over 100%, it shows you how amazing their software is. The average is still above 85, which is good for us. It means that they could make money on this. The problem is, as we progress throughout the year, those old averages will fall off, which means that the medical cost ratios average will start going down, the 3-year average. And once the 3-year average starts to fall, that means Clover's going to have to give its money back to the government or back to the patients in a way. Do you know what that means? In order for Clover to keep that money, Clover has to expand its growth rate so that they can take on more unprofitable members, so they can strategically impact their medical cost ratio, so the average doesn't, the 3-year average stays high. Does that make sense? But the question is, what are they going to use to offset that increase in medical cost, right? They're going to offset it by using the SAS coupon code. They're literally about to use the SAS coupon code, right? Right? No, not SAS coupon. I'm so tired, guys. Jesus Christ. SAS coupon code. Jesus Christ. I'm so tired. Okay. They're going to use their Counterpart Health SAS. Guys, I've been programming. For all the Lifetime Access members, you see me. I only slept maybe 3-4 hours this weekend. I'm sleeping tonight. I'm not, yeah. Clover's going to use SAS coupon code, right? Okay. So I'm sorry. So let me repeat this. So because the medical cost ratio has been going down, the 3-year average is going down too, which is not good. What they're going to end up doing is they're going to increase their growth rate. Right now it's 37%. I think they might increase their growth rate to 40, 50, 60%. Oh yeah. Right? And what's going to end up happening is their medical costs are going to rise, right? But what they're going to do is they're going to use the Counterpart Health SaaS business model to take that, and it's going to act like Clover's not losing those monies, right? So their medical cost is going to be protected, right? You see how powerful that is, right? So incredibly powerful, right? So which I think, because the reason why I'm saying this is, if you go to the intrinsic value software here, I'm using, I hit backspace. I'm drinking caffeine, no sleep. I mean, it's so bad. All right, so here's Clove, right? We said it was 287 was the free cash flow. Okay. All right, for the growth rate, I'm going to do 35%. Okay? Because and if you don't believe Clover can grow more than 60%, check Clover back in 2021, 2022. They grew 200%. What the hell? They're not doing that again. But guess what? I like to think like a CEO. I think Andrew Toy is going to use the Counterpart Assistance high gross margin business in that profitability to offset the medical cost ratio of 85 to 87%, not the BER, the medical cost ratio, when they expand a lot, because the 3-year medical cost ratio average is going to end up going up, but they're going to use the Counterpart to essentially make up for it. So if we do 35%, and again, we're all using this from the phone, let's see what the intrinsic value for Clover is. And let's go ahead and make sure it's the classics view. Look at that. We got a recession case of $17.42. We got a bear case of $37, a base case of $51, and a best case of $76. Guys, this is the real freaking deal. Okay. All right. So here's the intrinsic value, but guess what? Now you have access to the financial analytics metrics chart. So you can type in Clove, right? And it'll tell you, you can highlight it. You can highlight it. It gives you the equations, right? You can look at the 10-year. It'll go ahead and give you the enhanced AI analysis, which is down here, which shows you free cash flow turned positive in 2024. If you go ahead and I'm sure update the charts here, then now it shows you operating cash flow turned a positive in 2025. What I'm going to do is I'm just going to have this here for myself. Let's just say automatically tell operating cash flow turned positive. So I'm just going to have that as a note just to enhance the user interface, right? Okay, so, and I do all the programming, which is crazy, right? So then you could go ahead and do enhanced AI analysis. You could do extended history as well. Here's your enhanced AI now. Oh yeah, you can switch. You can look at the chart here as well. Here's your enhanced AI analysis. You can see that Clover's operating income improved, operating margins improved, net income improved. I mean, this is insane, right? Look at the EPS, it improved. Free cash flow, first time was positive, sign flip. Operating cash flow, sign flip, right? And then today, we just released this today. This is the quantum terminal. This is incredible. So watch this. So then now, you as soon as you click this, it removes the ticker. So you don't have to press delete. You see how I thought about that? Watch. So here is the graphs. You can do support and resistance lines, right? But watch this. If you want to do another ticker, as soon as you click on this button, it instantaneously removes that. See how beautiful that is? You don't have to hit backspace. My goal is to allow you to do this research without any bullshit, right? You can literally run these analysis, right? And my favorite part is, check this out. My favorite part is, and this is what we're going to do. We're going to do a segue. My favorite part is doing the generate research report. So now it generates a report for you, right? And when it generates it, it takes only a couple seconds. You can see I'm live. There's nothing, it's all, this is shipped. This is shipped to serve. This is shipped to serve. There's no bullshit here, right? This is a workable product. This is not some illusion and fugazi. We have lifetime members and we're shipping the product and they can get the product right now. All they have to do is open up their phones. That's the power of our stock trades, right? So now you look at that. You have the equity research here, right? You have the confidential equity research report. You have the executive summary. You have all this research at the palm of your fingertips. Everything you ever couldn't want in a company from the quantum chart. And soon we will bring in other parts like intrinsic value and all this to generate all these reports automatically. And yes, we are thinking of the future of having AI agents where you ask them, hey, I want you to search me all of the companies that went from negative free cash flow to positive free cash flow. Find them, generate a report for me, and send it to my email by 6 p.m. You get your coffee and you have your report. That's why this platform is going to be more than $20,000. This is you see what I'm doing here? All right, I have a background in AI. All right, I have a background in computer programming. Okay, I do research in AI. You understand where we're headed now? Are you understanding why I'm telling you? For the folks that are not in lifetime, I don't know what the frick is like. I don't know. It is what it is. You have the red pill and you have the blue pill, right? You want to wake up. You want to get out of the matrix. This is a real product. This is a real product. Okay, so now that we have that, and now that I showed you how this works, I'm gonna close this now. And there's my dog, right? There's my dog. And this is Arizona time, as you can see, okay? And I'm gonna take a sip of my coffee. And then we're gonna go ahead and we're gonna open up the equity research report here. Actually, no. Before we do this, let's go to why this guy invested in Clover back in 2016. What did he see that others did not? And it's almost going to be 10 years. Okay, so let's do that. Pretty cool. It will be a learning curve to learn all the perks on the Discord, but I will love it. And I am sure, of course, you trust me, man. The first thing I do when I wake up in the morning, I before I even take, my number one, it was a number one or number two. Before I go pee, right? I check the Discord, right? I see what my members are up to, right? Right? I don't know the difference between number one and number two. Right? Yeah, exactly right. I just joined Al. I see you in the terminal from now on, and I'm setting up my Discord account. Beautiful, right? And for all the people out there, just understand, you got less than 11 hours to take advantage of this platform. Okay. Again, you're starting to see the level of detail and the level of reports that are coming out of our platform. This is not fugazi. This is coming directly from Al Stock Trades. This is coming directly from us. Okay. There's no bullshit here. There's no fake news here. Okay. This is a real product. It's shipped to use. Apple-like. It's like Counterpart Health. It's shipped to use. Low startup costs. It can be started up right now, right? And you can be calculating intrinsic values like a boss. All right. And I appreciate your potential. And by the way, thank you for trusting in my work. I think of myself as an artist. I'm an artist, but I like to use my art through code, right? I love it, right? But I also like to make you money, right? So there's that too. They need to use PLTR that will put them in extreme profit. Well, here's the thing, actually. They actually have people that work from PLTR that used to work there, and now they join Clover. If you look it up, there's people from PLTR that are there. I think one or two. All right, now. So we talked about that it works on Android. We talked about I'm expecting a dip in the S&P later on in June. Now let's talk about this. Now we could go ahead and this guy invests in early stage ventures in Series B. In fact, what did Clover Health raise in their Series B? Wow, 35 million. That is insane. Insane in the membrane. Wow. Wow. Right? Yeah, our company that we built is worth around 16 to 20 mil. Can you believe that? That is insane in the membrane, right? Wow. Okay. So wow. Okay. Yeah. All right. So we have Wildcat Ventures Partners. I haven't clicked on this. Who is this? Who is he? Who is this guy? As that loads, we'll just watch something bad pops up. It's not my link, guys. Right? Okay. So the market, the far back 2011, it was clear to us that the shift to value-based care was it was going to unlock $1 trillion opportunity in healthcare. See that? $1 trillion opportunity in healthcare. I don't know why I'm not signed in. Hold on. Hold on. One moment. Okay. I'm going to highlight this so you guys can see it when you read it. Okay. So let's just highlight this so others can see what's important. Okay. So I think this is important. I can highlight now. Now people are going to know that I highlighted this. All right. Scalable. This is a letter that was written about why he invested in Clover in 2016 before it went public. All right. Clover Health operates in Medicare Advantage. Additionally, we were attracted to the sheer magnitude of the opportunity. Each Medicare patient represents $10,000 of premium and revenue. Actually, for Clover, it represents $15,000, a little over $15,000. Thus, every county that Clover enters is a $100 million revenue opportunity. And as you can see, that's very true, which is a figure so staggering that it has few parallels today. Apple, Exxon, AT&T, Verizon. So the team, first time we met Vivek and Chris Scale. I don't know Chris Scale. I don't know who this person is. I don't know if someone can enlighten me. He stepped down. So apparently he was the co-founder of Palantir, and he stepped down. And he's the chief technology officer. Who started Clover in 2014 alongside of ALHC, will now serve as an advisor for the company, a spokesman for the firm, and stated that UnitedHealthcare, ALHC said helped ensure build a foundation from which we can realize the true potential of this business. His vision for a technology platform is well underway and is managed by an experienced and growing team, ALHC said. For that reason, he felt this was an opportune time to shift from a full-time role into an advisory role and to focus on other areas of his life. Clover's business model is how predictive analytics to improve and coordinate care for Medicare Advantage enrollees, particularly those that are high risk. So, that's you see, at first I thought Andrew Toy was the technologist, but it seems as Chris Gale used to be the former technologist. That's interesting, right? So used to be the former technologist. And okay, so that's good to know. Let's see. I'm going to kind of read this quickly and I'll tell you what's important.
Pursuing this opportunity requires a team of strong domain expertise, understanding of market dynamics, provider relationships, revenue chain, compliance requirements, reserve needs, etc., and seasoned technical leadership to rapidly execute on sprawling technology set. With Vivek's experience turning around health systems and Chris's experience managing large engineering teams, we were confident that in a market where there's little margin for error, little yang, figuratively, this would be a team that could define a strategy, recruit them, talent, and ultimately execute on the vision.
Yeah, I get it. So that's good. So there's a technology stack that they're going to execute on. Okay, this is my favorite part.
Clover's mission to bring the outcomes and cost efficiency Kaiser from integrated health systems to the rest of the country. Vivek and Chris's elegant insights to achieve this mission through technology and life services, thereby avoiding the onerous and capital-intensive process of acquiring the underlying hospitals or directly employing health physicians, though it's significantly more nuanced. Their core insights captured by Clover Flywheel, illustrated below.
Okay, so very quickly. Okay, so as you can see here, Clover's mission is to bring the outcomes and cost efficiencies of Kaiser Permanente. Now, very important. I looked at the overall revenues of Kaiser, and if it was publicly traded in today's market, it would be worth anywhere between 120 to 150 billion dollars, which is kind of funny because Andrew Toy specifically stated that Clover could be a $150 billion business, which is equivalent to a $300 stock price, which based off of my current holdings, that would allow me to have $127.5 million of net worth just from that one stock alone. Okay. Excellent. Let's see. Let's read it here. Yes. So light services and thereby the capital intensive process of acquiring hospitals, which is what Vivek was doing, right? And or directly employing physicians. So that's actually important because it's a capital light business. It is a capital light business. Now, what does a capital light business mean? Well, let me explain to you very quickly. So let's to explain, because again, we need the data. We cannot explain without data. If you go to the financial data and analytics metrics chart, I'm going to go ahead and just use the desktop. My left hand hurts. Let's do. Let me think. If you look at Alignment Healthcare, look at the CapEx. CapEx is 35 million, 23 million, 41 million. CapEx is a lot, right? But if you look at Clover's CapEx, it's negative 1.56 million. They don't have properties. They like, it's a capital light business model. So they're taking a whole different approach versus if you look at Humana, 1 billion, right? 575 million. Look at UnitedHealthcare, 3 billion, right? So it's a capital light business model. Okay. And to do this was, and again, this was written in I wish I can highlight this. This was written in 2016, 2016. Okay. When Clover did their Series B fundraising. Okay. This guy's I'm like, why is this guy? I should probably reach out to this guy. Why is this guy highlighting everything? Right. So let's go ahead and read a little bit more. So Clover Flywheel. So you have the where should we start? Let's start here. Lower costs, right? Because that's what they're known for, right? MCR. You got accurate risk scores, which is what Andrew talks about a lot. Better analytics, star bonuses, which is what we got, and so that lowers costs. So then you can get more patients because then you can grow at 4-star rating and increase growth, which is 37%. Then you get more physicians because the more growth, more physicians. The more physicians, you get improved workflow, streamlined payments, and performance bonuses. And physicians get paid by using Clover Assistant. So then now, physicians are like, holy man, I like Clover. And physicians are gonna tell people, hey, I like Clover. It actually pays. I've heard family doctors say, hey, this insurance pays me a lot more than this. I like this insurance a lot better than the other insurance. They're going to say that. And they're going to say, I'd rather you switch to Clover because it's a better AI and allows me to take better care of you, right? So you get tighter feedback loops, right? And then it's a complete flywheel. And this is the big one here. This is growth, which ultimately turns into free cash flow. All right, let's go ahead and do this. It's very powerful.
F2's end result is accelerating market share capture. It's key. Components are described below at high level.
Accelerating market share capture. Okay, so lower costs by integrating data, applying analytics, and optimally deploying care teams, which is the Clover Health value-based care. You see how they deploy the care teams, and they did it back in 2016. You see how amazing that? What you see what they've been doing? Many people, yeah, that's amazing.
Costly hospital admissions, these savings, coupled with Medicare bonuses, for better quality care, ultimately result in lower costs for consumers.
Excellent.
More patients, effective marketing, and sales at high Clovers. Benefits, particularly lower costs and better outcomes. Lead to more.
Yeah, it lead to more people joining the Clover Health plan, more physicians.
More physicians, new patients to Clover's plans also bring more. Physicians who are subsequently added to Clover's network. For better, alignment with physicians in the form of improved workflows, i.e., fewer prior authorizations, simpler scheduling, etc. Streamline payments, improving revenue cycle management.
Again, fewer prior authorizations, they get paid more. They're going to obviously want to get choose Clover.
Improving revenue cycle management and higher performance bonuses. Clover can expect both physicians and patients to have more favorable overall experience.
Okay, I talked about this, right?
More physician density, better physician alignment, and user experiences. Inevitably leads to Clover covering an increasing share of practice patient population. As a result, Clover's life services care teams can more effectively engage and coordinate these physician practices. Further, improving patient outcomes. These improvements lead to even lowest costs.
So that's what Andrew Torre was saying. This was again from 2016, and Andrew saying it like 60 days ago, saying that it's a light service to where if they see some patient struggling before they get hospitalized, the care teams go in there. It's a light service, and they are able to help them not go to the hospital, which again lowers costs. And again, decrease hospitalizations, you get paid more because hospitalizations cost a lot.
Improving patient outcomes. These improvements lead to even lowest costs. We'll extend the cycle through flywheel, albeit increasing momentum. A critical feature of Clover's model, and what differentiates it from other health insurance startups, is that it is not beholden to provide contracting, leverage, the root, economies of scale, and competitive advantage of today's large players. In our view, this is a necessary prerequisite of nascent insurance startups who are competing against large, established players. Otherwise, startups are essentially days playing at a live game and running through lots of special dollars along the way.
Exactly. So there it is.
From an investor perspective, it is rare to find true flywheel, not simply network effects. But once together, it can grow to achieve spectacular market capitalizations, e.g., Amazon, Apple, Google. You're seeing the early signs of this in another portfolio company. Build a rank that focuses on big box e-commerce.
So it's rare to find these opportunities where you can get a like Amazon, Apple, Google style of an effect. Okay. So there's that. Now, what I wanted to do really quickly is give me a moment. I'm going to just, whenever I, things to take a look at here for me. I'm going to open up this here, and then I'm going to, oh, my brain hurts. All right. Hold on. Wait. I'm just gonna. I want to show you this because I think you're gonna learn a lot. And if every video I always try to push us forward. Then I'm doing it. If I don't, I'm doing a disservice to humanity. One moment. Okay. All right, ladies and gentlemen. This is called the life cycle of a business. Okay. Just like in life, we grow up, we're born, we grow up, we age, we die. Okay. That's businesses. That's what businesses do, right? So let me give you an example. So in the beginning, you get a startup and you get to a young company with growth, which is Tesla and Uber, right? I would say now it's Tesla is technically maturing now, right? It's grown from this. You get Netflix and Nvidia. I would put Netflix and Nvidia, high growth, right? Facebook and Google were mature growth, right? Coca-Cola, Walmart, it's mature, stable, but then ultimately revenues will start falling down, and earnings will start going down over time. Look at GE, Ford, etc. Right? They tried to remarket themselves, and ultimately, some companies, Kodak, Xerox, they all fail, right? And as a business person, you have to understand, and this is, again goes back to lifetime access when it goes to mastering stock market course. I'm going to be teaching you, because if you can't listen, having this data, having intrinsic value is important, but if you can't break down the intrinsic value through common knowledge and how to speak, like how I'm speaking to you now, hold on. Sorry, she was as my other doc. Her name is Coco. She's loco. All right, so the important part is, if you can't talk about this and know how to talk about business cycles, and you're going to lose money, right? So, I can see and explain Clover's growth, and I can see how ultimately it'll go from negative to positive free cash flow, which is how it already has. And usually startups are negative free cash flow here, and then they turn into positive free cash flow, and then they grow. Now, a lot of people are saying, we want dividends. Well, no, that's stupid, because the only time a company should issue dividends is if they're in the Coca-Cola Walmart stage. That's when it's like, the money, like Coca-Cola is not going to reinvent itself, right? Coca-Cola is not going to create an AI drinking soda. They're going to give you the money, and, you go find places to go buy. Now, Coca-Cola is different. I don't think Coca-Cola is going to die. There could be a nuclear bomb and someone has the ingredients of Coca-Cola, and they would go in and sell. Coca-Cola will never go away, because it's such a pristine business model that someone out there would trade 2 to 5 minutes of their labor, according to Warren Buffett, for a Coke, right? Because everybody wants a Coke, right? Such a great business model, and it's capital light. Like Clover, it's capital light because it doesn't bottle the services. It just gives the syrup. And the bottlers bottle the service. If you didn't know that, then you don't understand the business model, right? So the point is sometimes old companies like to act like young companies, where they ultimately try to buy a losing money business to try to change their business model, and that doesn't work, right? That doesn't work. And sometimes young companies try to act like old companies by getting a lot of debt. No, that's not going to work either. You're going to screw yourself. That's why I love Clover, and I see them. I'm like, oh wow, you don't have debt. The people, I'm telling you right now, guys, the management team at Clover is very strong. Okay, I've studied thousands of companies. You have no idea. I mean, I built this platform. Okay, I mean, to build something like this, you have to have some form of baseline knowledge and mastery, which is why when I tell you, when you join the Mastering Stock Market, it's not even a course, it's a platform. You get access to the software and all these things. I'm going to take you from zero to hero, right? I'm going to take you to being in a 100-mile radius. That's where you're in right now. Probably even 500-mile radius. You're going to know more about stocks than 500 miles around you. I guarantee it. You have no idea, right? I'm confident in this. Okay. All right. So we talked about so I would say Clover right now is young growth. It's about to explode, right? So we talked about that. Okay. Here's the guy who wrote the article. This is his business. Interesting. So I'm gonna keep this for myself. I want to do some due diligence on these people, right? And I'll share it with the research edge. All right. So now let's do the confidential equity research report. This was pulled directly from our software, again, that you can get access to. Again, we only have less than 11 hours left. Take advantage. So very quickly, let me just drink some coffee, and give me a moment, and just let me just take a 5-second chill out break. All right, I'm back. All right. So there it is. All right. So between Q2, Toots, love it, love it. Oh, yeah, and you're already starting to see institutional investors getting in. Al doing heavy lifting to make it easier for us to digest. Absolutely. That's the whole point. That's the whole point. We're gonna make this very easy, right? This is what you're seeing here is like literally hedge fund level graded information, guys. This is on desks of financial Wall Street institutions. All right. So here's the executive summary. This is for UnitedHealthcare. So overall, our proprietary model says it's a bearish outlook. We only got one bullish signal. There's only one uptrend, and that's on the minute. Everything else is a downtrend. So it's a bullish score of 1. And hold on for a sec, please. All right, sorry about that. One bullish score and 4 bearish score. Running 5,000 Monte Carlo sequence simulations for the base case gives you a $286 stock price, which is a negative 5.42% change. Interestingly, I'm curious to see what it's like in the overnight market for Robinhood. And right now, I'm seeing it being up 0.17%, not by a lot. And also, interestingly, Clover is being bought by Robinhooders on the dip. That's kind of interesting. I am expecting, again, for my qualitative models here, quantitative models, I am expecting where the hell did it go? I can't. Here it is. I am expecting, the second half of June to, middle to, mid June here to June 20th to be red in the S&P. So just there's that. But overall, from a fundamental perspective, institutional ownership, it's bearish, which is weird. This adds a note of caution. So let's go ahead. You can go ahead and read this, but let's look at the support and resistance. And it graphs it for you, pristine, all done automatically for you in a research report that you can send to yourself. All right. So here we are, 302. So we're bouncing off of this support line. This is the minute. This is the only uptrend that there is. On an hour, we have 296 as a level of support. And, again, 298 and 291. So we've bounced off of that. So the 290s, if we break 290, then we're going to go back down to hell. And then we've obviously got some support from 262. So that was a level of support that it bounced back up. So we're going to see if we're going to retouch those lows. From a Fibonacci level, you can see 294 was a good level of support here. 255 was a good level of support from a Fibonacci perspective. And again, 274 and 291. So it looks like there could be a recovery, but we'll see if it retests these lows that you see here, right? Again, 304. Let's see if we'll be able to break it out. And this is the Monte Carlo 25,000 simulations, 5,000 each. And you could see, the bull case, $300 to $675. Base case, $300 to $331. Bear case, $300 to, to 160, 167. I would say from a daily perspective, from the base cases, 217 to 376, so 286. So from a institutional ownership perspective, we got a bullish score of 3, bearish score of 6. That means institutions are bearish on United. You could see that investor holdings has decreased. The number of shares has decreased. They sold, so they're selling United. Obviously, the stock is down. Total invested, they tried to increase their investments, so there are people buying the dip. Ownership percent now has somewhat dropped. It used to be higher. Now it's dropped from 94 to around 86%. Here's new positions. We have a decrease in new positions from the normal baseline and increased positions. So institutions are not doubling down, actually. We have closed positions. We have we have more than 300 institutions closing their positions, which is higher than the average. So a lot more people are hold on, sorry. A lot that's weird. A lot more people are closing their positions and a lot of people are reducing their position. In fact, they started reducing their positions above the average from 2023 and Q1 2024. So it shows you that some of these institutions knew something was up. Who knew, right? And then put call ratio now, people are scared to short this. Historical view, it's gone down a little bit. We'll see if there's any bite to it. Again, if we look at it from a 25-year perspective, institutions haven't sold that much. But if you look at new positions, they have decreased it. But again, nothing that we haven't seen before. The increased positions, that is kind of interesting. The last time we saw this was around 2022. Closed positions, now that's weird. Look at the number of closed positions. It's never in the history has these many institutions ever closed this many positions in United. Same thing with reduced positions. That's crazy, right? So this shows you there is some bite to this. Obviously, the stock is down more than 40%. And then here's what analysts expect. I'm going to just scroll down to earnings because that's the most important is net income. So interestingly, for earnings, you can see they're expecting 2025 to be a drop, and then 2026 to somewhat recover. But really, not until 2027. They're expecting this to be 2 years for United to recover. Who knows? They may recover in 2026, but you can see they're expecting a 2-year level of disruption for United. These are the expected net incomes of around 25. This is $25 billion, right? Is that 25 million? 25 billion. It's 25 billion. Okay. Same thing with earnings per share. They're expecting it to finally reach back to normal levels in 2027, which you can see here, right there. And then, you could go ahead and, there it is. Okay. So there's United. So I need more data to see if we're able to, if we're able to retest 291, 298. We need multiple levels of bounce off of support, right? Here's the confidential equity research for Humana. You can see there's a bearish outlook. We have 0 bullish signals and 5 bearish signals. Interestingly, institutions are actually bullish on Humana, which would make sense to you if you follow the earnings. They actually weren't that much affected for medical costs. They actually did a lot better than United. That's why institutions are bullish, right? But you can see it's a crap chart, right? Which is why healthcare is underperforming. In fact, I actually want to show you something that you might find interesting. I wasn't going to show this in this video, so this is going to be like a bonus for people that are watching. Let me show you real quick. Look at the annualized 10-year return. Healthcare is underperforming, but watch. Look at the 5-year. Again, healthcare is underperforming. Look at the 3-year. Oh my, where'd it go? Look at the 3-year. Healthcare is underperforming. Look at the 12 months. Healthcare is underperforming. Look at the year to date. Healthcare is underperforming. Look at the 6 months. Healthcare is underperforming. Look at the 1 week. Interesting. Healthcare is outperforming. Interesting. Could it be that we could be expecting a recovery in healthcare this week? I don't know. But we need to see this level of approach for the 6 months as well, and for the 1 month. Here's the daily change. Healthcare outperformed on Friday. Okay. So interesting, right? So again, let's go ahead and do that. So So yes, we're going to be doing Oscar right now. Absolutely, right? Right. Oh, actually, you know what? Oscar, what we're going to do is we're going to save Oscar for our lifetime access members. I'm just kidding. I'm just kidding. Now we're going to show it. I'm just kidding. Okay. I'm not going to do that to you guys. Right. I understand there's people out there that, have a hard time affording, the lifetime access. And this is an example to show you what you can expect to see. But very quickly, support resistance lines, 230, 224 serving a good layer for the 1 hour. We broke the 256. We broke the 254. We broke 259. Could we go to 130? Well, I'm telling you, if we break 227, 224, then 130 is next. I don't think that's going to happen, but you never know, right? Here's 230. We got 229, 227, 226. We have strong levels of support level here, so I wouldn't expect it. This is obviously on the minute. We got a very strong level of support here in the hour chart for 215, $215, right? We got 224 here, 227. We got 215, right? This is Monte Carlo, what to expect for the bull case, 232 to $540. Base case 230, hovering around 210, 181. Bear case $99 to 228. We are operating on near that, in the minute, just shy 1%. In terms of institutional ownership, we got 6 bullish, 3 bearish. So if you look at investor holdings, yes, they started to decrease, and they actually started in 2023. So if you would have caught that, you would have realized in the first quarter of 2024, you would have realized that you needed to get the hell out, right? So that would have probably saved you a lot of money if you had access to this software, right? The software that I created for my lifetime access members. And if you look at the beginning of 2024, you would have realized that they're selling, and you would have figured it out. That's why all this was going. That's them selling. You would have figured it out, and that would have saved you 49% of a loss. Number of shares. Interestingly, you realize that by Q2 2023, Humana actually, they started selling shares, and they did it quietly, but our system was able to detect it. So by 2023 halfway point, you would have honestly realized it. So honestly, you see that little sell-off right there? That sell-off, there was a sell-off, and then retail bought the dip, right? They bought the dip. There's a sell-off here, but that's institution selling. But again, sadly, retail investors don't have access to this data, so the stock recovered. As soon as it recovered, you could have sold out, and you would have saved yourself a headache. You would have saved yourself 55, 56%, right? So you can see that little sell-off there. Then it recovered is essentially this movement here. Again, it's all numbers, guys. You either have access to this GPS or you don't. People that don't have access to GPS, they crash and they blow up their portfolio, right? And I've seen it happen a lot. So here's total invested. So they're starting to invest in Humana again. Potential this could be rebound. Ownership percent decreased a lot. You can determine here from Q1 to Q2, ownership decreased. So people sold out, but it was a different sellout. It's never seen, this type of sellout hasn't been seen in this average. So you got to pay attention to it. What are they seeing? And then you would have figured it out. We already were telling the medical costs were going up. I mean, heck, they're pulling out of freaking Louisville right now. They put another property on sale. New positions slowly going up. Increased positions, they're slowly starting to recover. Reduced positions. Okay, so now we're starting to realize that they're holding their positions. You look at this drop. This is the past 25 years. Back in 2000, this is literally 25 years of data for institutional ownership. You can see, this was the biggest signal here that it was dropping. Total invested, recovering, new positions, increased positions. And let's look at net income. So they're expecting net income to drop in 2024, 2025, and 2026 to a full recovery in 2027. And then we go back. This is going to be great for Clover because Clover is going to be growing with this as well. Okay, there it is. So now let's go ahead and do Oscar. Let me just drink some coffee. Going to bed. Long live Al and long live Gun Show Trader. So funny. All right, so here's Oscar. We have our stock trades assigns a bullish score, 3 bullish signals to 2 bearish signals. Quantitative analysis 15 with a high of $25, right? And a very, very low of 9. A fundamental perspective, it's bullish. And we'll show you here. So this is kind of where we're at right now. 13's been serving like a good, 14 has been a good level of support. 1372. 1529. You could go and read this. My voice is tired. I'm exhausted. 6-3 bullish scale. You could see institutions piling in on Oscar. Total invested. That's because the stock drops a little bit. Ownership percent. Slight decrease. Interesting on why. Maybe Trump. I don't know. Even though Jared Kushner's brother is leading it. New positions. Reduced positions. Closed positions. So that's interesting. A little slight on the put side, but if you look at it from the perspective here, we're growing. So I expect Oscar to continue going up. Let's see earnings per share. Net income flipped to positive. They can't lie about it. They don't give a lot of data because I think this thing's going to explode. So there it is. So now let's go ahead and do Alignment Healthcare. Alignment Healthcare is bullish, 2-3 on the scoring systems. Institutions are bullish with a high score of $25. Again, that 14 has been a good level of support here. Now it's going up. And let's see if it can crack 1529, then 1555. Then we should see it go up to obviously 1538 as well. And we should see it going up to 1739. Then 1839. Okay. Here's the Fibonacci. You can see it cracked 1519, 1515. Seven to 2, incredibly bullish. Investor holdings are increasing. Number of shares they're buying is increasing. Total invested is increasing. Ownership percent is over 93%. New positions is increasing. Increased positions are increasing more than the average. This is like the baseline, right? Like this is like I love you this much, and this is like I love you this much. Like it's more than the average love, right? So if this was like a normal love that you would find at the club, this is your wife's love, right? Hopefully it's above this line here. I don't know. It's just like a weird example, right? All right. And if it's below, oh boy, right? You better sell. You better sell that, right? Let's see here. So Alex, it all goes back to opportunity. Amazon fell when the fundamentals were doing well. It's an opportunity, right? And I told you, UnitedHealthcare has dropped, and it's good. We want Oscar to go up, and also the reason why. And I'm going to say this again. You ask why, so I'm gonna take this question at face value. To answer your question, you have to use the data, right? You have to use the data. So I'm going to tell you why. Why is Oscar up? The reason why Oscar's up is because they got their triple dragon, right? Let me zoom in. Wrong one. The reason why Oscar's up is because they're operating cash flow positive, they're free cash flow positive, and they're net income positive. If you look at the net income, if you look at the free cash flow, they're positive 25 million, and their free cash flow is positive 950. And if you look at the most recent quarter, look at their net income, $275 million. That's a lot. Now, if you go ahead and take a look at Clover is still unprofitable. Okay. That's why Oscar is up. It goes back to the triple dragon. It always goes back to fundamentals, right? So once we get the hat trick, then we will be immune. Well, the thing is, it's not a hat trick, right? It's a business, right? When you invest in the business, you want the business to make money, right? Businesses that make money do well in the stock market, right? Clover is literally at break even. In fact, they were profitable last year in Q2, right? So, yes, right? And go find me any stock that's went from negative to positive and that didn't make any money. You'll not find me. And I will bet you $1 million. Go find me a stock, right? It always goes up, right? Because at the end of the day, a stock price is the summation of all future free cash flow. And these are not my words. These are the words of all the billionaires that have recited these words from time after time, all stemming from our father of value investing. Lo and behold, Benjamin Graham. God bless Benjamin Graham, right? Right. And there's your Sunday, right? Right. The father, son. No, I shouldn't. Oh, there's my dog, right? There's my son. All right. So there's that. So we answered the question there. Total investeds going up. All right. Now, Alignment Healthcare, they're expecting it to be profitable in 2028. And you could see they're a little bit more truthful here because institutional investors are holding it. And you could see we should be mirroring Alignment in terms of profitability soon. We're more profitable than Alignment. So I would say 150. So we should be at these levels soon. So imagine in 2029, if we get near 250 million of profitability, watch, we do 80 minus 19 plus 43 plus 250 mil. I did this wrong. Hold on. Plus. That's 354 million of free cash flow. 354 million. I mean, you go in right now and you go in and you look at the, where the hell did it go? There it is right here. Sorry. You go to the advanced price target software. And if you type in CLOV, and if CLOV grows to, let's say 30, let's be humble, 23%, but it does 354. Let's do the classics view. We're looking at $10 to $40, right? $10 to $40. Now, if it starts doing 35% permanently for the next 5-10 years, that's $21 to $94, right? And that's not including SaaS, right? So, and for folks that are watching, if you want access to our research, access to everything, there's only 11 hours left, less than 11 hours left to get your $1,200 off. That's $1,200 off. That's more than $1,000 off. Lifetime access, one-time payment to get access not only to our software that you can use on the laptop and phone, but also to get access to our research, to generate your own reports, and get access to our community that has over $45 million of net worth. I implore you to find something somewhere online that has this much value, right? You will not find it, right? All right. So there's that. So there's Oscar. We did Alignment, and the earnings per share. You could see it's going to approach over $1 soon, which is incredible. I mean, literally, 42 was that $1.35. Yeah, it's over $50 stock price, right? So Alignment's going to go up soon. Okay, so now let's go ahead and look at Clover. Okay, so Clover, based off of proprietary models, it's bullish. We got 2 to 3 signaling there's weak trends. 324 with a high of $5.55. Bullish on the institutional ownership. You can see right now 302 has been serving as a good level of support. We need to crack 310. We're on a downward trend here. You can draw off the line here. 296 has been a good level of support. Let's see if we can hold. Then we got that 287 if we break 296. Then we got 337 here that we unfortunately failed. Here's 302. And funny wise, we have bounced. Does this bounce have legs? We'll see, right? Again, we have 272. If that fails, we got 223. I don't think it's going to fail, but we'll see, right? Here's the institutional ownership on the bull case, only the bear case. Definitely expected to get back to, above 324 soon. If you go ahead and look at the investor holdings, we're 7 to 2, meaning everything's bullish, only 2 bearish. Look at the number of investor. These are the big toots. They've increased, never been seen before in the history of Clover. A number of shares, they broke the number. They broke the average. So that means they're buying more than they ever bought before since the last couple of quarters. Total invested has surged. Ownership percent is surging, meaning they're buying more shares from retail investors because retail investors are selling. Probably your Weebles are selling because they're more traders than, let's say, Robinhooders. I would say is more long term. New positions have increased. Increased positions have increased. Closed positions, we have old cowboys leaving, but again, this could be cyclical, and this could be hedge funds shorting ETF stocks, and you have reduced positions, which is increased. And then put the call ratio against cyclical. You can look at the investor holdings for the past 25 years. It's never been to this level before. This is a big deal. This shows you that this is a real deal, and people are buying. They're breaking the craft here. You can honestly also look at other stocks that have broken the mold, and you'll see, Amazon, AMD, all these things. In fact, yeah, we could do this later, but we can show you reports later on. Actually, let me just show you right now. Let me print another executive report. And again, you can print a limited, right? One moment. Hey, Michelle, is the Tesla charged? Excellent. So let's go ahead and take a look at Apple. Okay, we're going to generate a report for Apple real quick. I want to show you something. Right? So like we said, Alex, we believe it's going to go when it becomes positive net income, positive operation, and positive free cash flow. It has to do for 4 quarters. Right? Okay. So there it is. Here's this. Excellent. Excellent. Ready? Are you ready, Alex? Ready for this? So here, wait, no, that's United. What? Hold on. Sorry. I printed the wrong report. My brain wants me to do United, but I don't want to do United. Let's see. It's generating report. Excellent. All right, ladies and gentlemen, pristine. Here's the report. It's generated today, right? Okay, so now let's go for Apple, and let's go all the way down to the ownership here for the past 25 years. Where is it? This is here, past 25 years. And I want us to go to ownership here. All right, you see? Look at this dip. You see this dip? Everyone bought Apple back in, let's just zoom in here. All right. And let's go ahead and zoom in for Clover. Let's go to Clover. Clover right now's ownership is around 20% plus. This is Clover. Okay. Right? This is Clover. Now let's look at Apple. Back in the great financial crisis, institutional ownership for Apple fell down to right around 21, 22%, which is right around where Clover is now. Okay. So what was the stock price for Apple back in 2007, 2008 at the same institutional ownership level as Clover? Well, let's figure it out. Let's go ahead and look it up. Apple stock, and let's look at 2008. So let's zoom in. Again, this is Apple. Let's zoom in. Here's 2008. Right? Look at that. 2008, 2009. Look at that. Trying to get the lowest one. There it is. $3.16. $3.16. So institutions owned around 22% of Apple, and Apple stock was $3.16. Okay. Now, what's the stock price of Clover? I'm going to look it up on my phone. The stock price of Clover right now is $3.06. Ladies and gentlemen, are you starting to realize what I've created for you? I've created a software that gives you the inside guts of Wall Street. I'm giving you their guts. You understand what that means? I'm giving you these people's guts. Go make your goddamn money. Excuse me for using God's word in vain. My apologies. I'm giving you their guts. You have the insides of Wall Street now. You understand how powerful this is? You see that? This is Apple, $3 trillion business, right? You saw how it sold off, right? And then institutional ownership was 22%. What's Clover right now? 22%. Where could Clover be when it goes up to 40? Think about it. Okay? There's no bullshit here. I don't bullshit, right? I don't bullshit you. Okay? I'll save that for other people on YouTube, right? I'm all data. That's all I run on data. Michelle hates it. She speaks to me. I'm a machine, right? That's all I am a machine, right? It's like that comedian. I'm a machine, right? All right. So here's net income. They're expecting it to be profitable in 2028. This is obviously wrong because I've done a lot of due diligence. They try to mess up the data on the Bloomberg terminals to lie, but they didn't know that I know how to calculate earnings per share, and I did, which you can basically see right here. I calculated earnings per share, and they didn't know I know how to do that. And now they're like, well, crap, dude, how do we beat this guy? For all the analysts that are watching, you can't, because you know how many people I've trained that are now working for your firms, how many people I've taught in business school for finance and accounting, and how many people are in your firms. Go speak to every firm and go say, who is this guy, right? I guarantee you some of these folks came from Eller and other business schools. They're like, wait a minute, I know this guy. He taught me. I've taught thousands of people, right? And a lot of them are in Wall Street firms now. Okay, some of them actually start their own quant fund. Actually, they're friendlies. I've actually used shared some some feedback with them to help me on my endeavors, right? Because I'm trying to establish a quant fund myself, and it's very tough. But kind of like Jim Simmons, but I need to hire a bunch of mathematicians and physicists. It's tough, right? We'll see if that ever comes into fruition. We don't need it. Warren Buffett's just as successful. All right, so there's net income and it's funny. They're not being truthful here, so I wouldn't look too much into it. All right, so there's that. We got Louisville. Oh yes, risk on. So you see how 2022 was completely risk off. A lot of stocks were down, right? Well, we used to be risk on for a few weeks, and now we're about to break on to risk on, which is going to be continuing on the second half of the year. Like I said, we're going to be bouncing off of the treasuries here, or slowly bouncing up. I do think treasury yields are going to go down, meaning that the bonds prices are going to go up, which means the yields go down. If you don't know that, learn it. Okay. Again, SAS coupons code. Again, 11 hours left, less than 11 hours. $1,200 off. Take advantage. Take advantage. Okay. That's all I have for you guys. God bless you all. And welcome to the future of Al Stock Trades. Now you have access to data at your fingertips all around the world. We are in over 44 countries. We have access to over 60 plus stock markets. This is the real deal. We are the real deal. God bless you all, and I'll see you on the next one.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls out.